Your badge is on. Do you care?
Oh,
Ha!
welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live in Toronto from Consensus2025 by CoinDesk. Joining us for the segment, Dave LaValle is back with us, global head of ETFs over at Grayscale, and we're here to discuss adoption trends and how the product cycle is continuing to evolve. Great to see you as always.
It's awesome
Thanks
to
so
be
much for
here.
being
How are you?
Doing good.
Good.
Doing good now that you're here. The success of spot Bitcoin ETFs, it was phenomenal, right?
Yeah.
So how is Bitcoin product market, how's it continuing to mature? What are some of the exposures that you're thinking about for 2025?
Look, Jill, we're 16 months after, the Bitcoin ETF approval. There's 100 billion in assets. Obviously, it's a total inflection point for, the real adoption of crypto into, traditional portfolios. And the ETF has long democratized asset classes, and crypto is just the next version of that. What I can say is that since this, approval, the conversations with financial advisors have really changed. It started with a binary decision, yes to Bitcoin or no to Bitcoin. And now it's really about, oh, wait a minute, how do we incorporate this into our portfolio? How do we take advantage of how we can incorporate it? Where do we put it? And the financial advisors are really, focused on being educated because historically they haven't had the need or the desire to.
Right. Well, of course, it's going to impact their practice, right? If clients are looking for that, whether it's digital asset exposure, vaults in general, which is another big trend, they're going to have to understand, and make the priority of educating themselves and understanding what the risk profile looks like.
Well, risk is really where it comes down to. And originally, financial advisors had an asymmetric downside risk if they were going to, suggest to their client to make an allocation to crypto.
Yeah.
And with the ETF conversion, what's happened now is the asymmetric risk is totally inverted. And if a client comes to a financial advisor and the financial advisor doesn't have a strategy or isn't educated, they have a financial risk of losing that client. And with 80 trillion of wealth that's going to transfer generationally, the next generation is going to need a strategy from the financial advisor. And so those are some of the conversations that we're having. We have the lowest cost Bitcoin ETF in market. We have the lowest cost Ethereum ETF in market. And that's really, fostering great conversations with clients.
Speaking of Ethereum ETFs, they also need to understand and conceptualize what the different underlying assets are versus Bitcoin. How are you advocating for introducing assets into Ethereum and as products continue to evolve?
Yeah. So I think one of the things about partnering with a, fully dedicated crypto asset manager like Grayscale is that you can actually have those conversations beyond just Bitcoin as a digital store of value. And so we obviously have our Ethereum product in market, and those conversations are a little bit more challenging because financial advisors can conceptualize the concept of digital store of value for Bitcoin. When you start talking about Ethereum being a disruptive technology and being, something that's going to disrupt the way that we kind of have the next generation of the internet, it takes a little bit more of a sophisticated approach, and that's where Grayscale really shines.
Right. Well, when you think about Ethereum and other digital assets that are part of the infrastructure that's growing, I mean, it's not much different than when you think about the technology that's applied for, let's call it more traditional industries. I mean, everything has an infrastructure associated with it.
Absolutely.
What about new ETF followings and product developments that are coming to market, including what do you think could be improved next?
So what I would say is that the conversations we're having with our clients are becoming more and more sophisticated. So we'll have a conversation with a client. They'll say yes to Bitcoin, but maybe the Bitcoin ETF is not approved on their platform. And so they need a Bitcoin replication strategy. So we have a miners product. We have a Bitcoin on balance sheet product. And these products have high correlation to the underlying price of Bitcoin, but they're in, global equity representation of that. We also have some covered call strategies. So how about harness the volatility of Bitcoin and turn that into kind of yield generating products? So we have BTCC, which has at this point, over 50% annualized, yield, which is incredible. And then of course we have, digital asset products that are going to be kind of pushing down, the market cap spectrum. And I think everybody always asks me, what's the next ETF going to be? Is it going to be Solana? And I think, what I do is I point to the time frames of these filings, and, the next kind of expiry on the 240-day clock for our 19B4 is our digital large cap fund. So this is going to be a index-based multi-token product. And I think it's going to be approved in the summer.
I think what's interesting is you're seeing the growth of indexes within the digital asset space. You had mentioned before that the ETFs might not be available on advisor platforms. how is it differentiated from the product that you're offering
Yeah.
then?
Yeah, exactly. So we're working with all of the wealth management platforms, the largest wirehouses in the world. In fact, about a week and a half ago, we had over 30, billion dollars in one room talking to due diligence teams to explain to them, who Grayscale is, how the products work, to get them more and more comfortable with it. Again, their advisors on those platforms are pounding their door down to say, we need the Bitcoin ETF and we want Grayscale because it's the cheapest one in market. So we're having great conversations and getting them over the finish line. And that will offer a much more broader adoption to the 30 trillion in assets that are on these wealth management platforms.
Once there is framework that's introduced and
Right.
policy and legislation is passed,
Right.
that's going to be a catalyst as well.
Right.
Right. I mean, these are the, wealth management or more traditional types of financial companies need to hear that. They need to understand, the environment that they're operating in.
The reality is there's been a total change in the regulatory winds.
Yeah.
We had regulatory headwinds that have turned into industry tailwinds. And I said I've long been saying we have gone from, this, very certain unfavorable regulatory environment to a much more favorable, but a bit uncertain regulatory environment. And so that's offered us the opportunity to take advantage of the executive order that came out of the White House and the crypto task force, and to get back down to Washington, D.C. and continue to educate as a leader in the market. And that education is going to lead to really sensible, thoughtful regulation that's going to be to the net benefit of the end investor.
Good, Dave. Appreciate the insight as always. Thanks for joining us on Trade
Great
Talks.
to be here.
And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.